Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the Word Options training course. And what we're really quickly going to do is we're going to break down a company called Moderna. So Moderna is what I like to call a drug maker, or what some people like to call a pharmaceutical company. And this is going to be a really good video for traders, options traders. I want to kind of understand how to start stepping into the pharmaceutical space and some of the things that they want to look at to make plays in the pharmaceutical space, but also for people that want to maybe look at long-term buy and hold plays. So we're going to kind of give information for both sectors of this particular market. And one of the reasons why I wanted to go into a pharmaceutical company, which is really not my specialty, none of the companies that I really trade on a regular basis are based on pharmaceuticals. I think I made one pharmaceutical play last year, is because of before people were going into the tech space, the pharmaceutical space was where a lot of people went into to get a lot of really explosive growth, right? Because when you're looking at pharmaceutical companies, as they move through their what I would call FDA approvals. So, you got stage 1, stage 2, stage 3. A lot of times you will see a lot of volatility in those particular stocks, right? So if a company goes from stage 1 to stage 2, you can see a lot of volatility. So you can see a company go from being worth $10 one day to being worth $100 the next day once those particular approvals go through. And so when you're looking at pharmaceutical companies, you want to kind of understand, what is the market for this particular drug? How many people will this drug be available to? What do we think the cost is going to be for this particular drug? And then, how long can they sell it? Right. So some drugs can only be sold for a short amount of time because they're going to solve a problem. And then other drugs can be sold indefinitely. So you want to always ask those questions. But the biggest question you want to kind of ask is that, what is the market for this particular drug? So if you really want to commit yourself to the pharmaceutical space, it can be very beneficial to you. It can be very profitable to you. But you may have to learn some language. You may have to kind of understand how the FDA trial system works. You may have to kind of immerse yourself in the space to really understand, like, how is this particular space constructed? However, if you really want to be successful in the markets, if you just commit yourself to it, I'm very optimistic about your ability to be successful. So let's go ahead and go into it. So we're looking at Moderna, right? Closed on the 7th at 163. And so this is the 1 year. I want to zoom out a little bit, right? And so what we're seeing is that this company, let's say this is 2020. So let's keep zooming out. Okay, let's stay here. So this company around 2020 was trading around $25 to $50. It moved up later that year. And what we're seeing is 5/19/2020, we had a little bit of a dip around that $50 mark, and then kept moving down. And then let's say around late 2020, we saw it moving up really strong. And so what was this kind of coordinating with? They actually saying that they have a vaccine that's available to go to market, and then the vaccine actually being rolled out. Now let's take an even longer time period. What we see is in the 2019s, this company rarely got over $25, right? And that's what we see. What made this company become something that people are going to look at is when they started getting money from the federal government, I believe, or they started talking about developing a particular vaccine. So I don't know if that vaccine production or vaccine R&D came from federal government money or it came from private money. But what made people start becoming bullish on this stock price, and we're starting to see it move up, is as they started talking about being able to develop a vaccine. And then it just became a timetable or a race to see when they were going to actually be able to bring that vaccine to market. Because we know that the vaccine manufacturers got I think, emergency use authorization, which means that they did not have to go through the full trial process. OK, so what would normally take maybe a decade to get a vaccine out the market, they got a vaccine out in less than 6 months. Let's say 6 months to a year. So when news came out that they were getting ready to create a vaccine, then the goal was, do we think they're going to be successful? And then the goal was, well, once they say they have one, they were able to get emergency use authorization. Then now let's put it to the market. And then once we see as they got closer to putting it to the market, the stock price starts to really move up. Now, what you're seeing with a lot of this volatility is news. This company, let's go back to the 1 year, is very news sensitive. So if news comes out that, a vaccine may be unsafe, they may sell off. If news comes out that this vaccine has a higher efficiency that may be coming from a competitor, this may sell off. If news comes out that their vaccine has a certain percentage rate of efficiency or effective rate, this thing may move up. So what we're seeing is that it hit around 156 at a close, and then it just dumped really hard all the way down to almost $100. Then it came back up, went back down to around 125, came up, went back down, shot up again, sold off a little bit, and now we'll kind of see whether or not it's going to continue to sell off or consolidate. So ever since 12/19/2020, which was late last year, this thing has been very volatile. We're seeing like a big W patterns, really, really volatile ticker. So that's what you want to look at with Moderna, right? You have a company that essentially has one drug, and we're going to kind of go into this later. They got one drug that they're currently producing. They have other drugs in the pipeline as far as development, and they're very, very news sensitive, right? So if something comes out about COVID, they may move up or they may move down. Something comes about the government having some type of policy against vaccines, they may move up, they may move down. So as a trader, you want to kind of understand that this particular company is very, very news sensitive. Now, here's something I want you to look at. So let's go to their statistics. First off, their price to sales, we see it was 164. It was 411. That was at their height. It was 233. It was 154. That's 77. So that's their sales in relationship to the price of their stock, right? So if you look at their revenue, they did 273 billion in revenue. Revenue per share is 6.59, right? Their quarterly revenue growth is like 24,000. It's crazy. So you look at their revenue, right? It's not that great, but it's not bad. But it's not that great and comparable to other pharmaceutical companies. But this is a one-trick pony. They got one drug in the market, which is the vaccine. They didn't have to go through a normal clinical trial program to get it to the market. What I like about this company is this. They got $7 billion in cash, and they only got $279 million in debt. To me, I like this company as a company to be acquired, because if I'm looking at buying this company, I can buy it for a multiple of revenue, right? I can buy it for a multiple of revenue, so many times revenue, and I'm buying a company that already got $7 billion in cash in it and has very little debt, right? There's very little debt inside this company. Okay. So that's one thing I like about this company is they have very little debt, but I think they're overpriced because their price to sales is very high, even at 77. And I'm going to show you a comparable. Here's Johnson & Johnson. Everybody knows about Johnson & Johnson, right? They have, I think, the one-shot vaccine. Their revenue last year was $84 billion, right? They were $84 billion over the year. Their cash is 24.6, but their debt is 33B. So they got more debt than cash in the company, but because they're churning so much revenue, nobody's tripping. They can service, right, this debt just over time. Well, if you look at their price to sales, it's 5.34. That's their price in relationship to their sales. When we look at this price to sales, it's 77.4. So in my opinion, this particular stock is really overvalued from a share price standpoint. And I think eventually it may go back down. Right. I think this stock really should probably trade between maybe $75 and $100. And one of the reasons why I say that is this. If we look at their pipeline, right, COVID-19 is the only thing that they have commercial. And we know now, because like I said, they got emergency use authorization. So they didn't have to go through a typical clinical trial process. This cytomegalovirus vaccine is in phase 2. Right. Everything else on their vaccine thing is either in phase 1 or is in preclinical development. This HIV vaccine is going to stay probably in preclinical development forever, right? If we look at these therapies, they're in either stage 1 or preclinical. Cancer vaccines, this is in stage 2, this is in stage 1. So they don't have any other drugs in their pipeline that are even close to being on the commercial level. And you can stay in stage 2 and stage 3 or phase 2 and phase 3 for a very long time until you get it right. Okay. So we have a company that's been around, I want to say since maybe 2016. They produced one drug successfully, which is this vaccine that we talk about again. They were able to push it through because of emergency use authorization. So it didn't have to go through a typical trial program where you can maybe find out that it has implications, yada, yada, yada. Didn't have to go through that. Everything else is either in phase 2 at the top, at the ceiling, or it's in phase 1 of preclinical. They're not close to any kind of commercial viability for any of their other drugs that they have in the pipeline. So then the question is, what is this company really worth? Now, the question you want to ask about COVID, is this vaccine going to be a one and done scenario? right? So like, when you're a child, you take certain type of vaccine. I think you take mumps, measles, and rubella, MMR. Most people don't get mumps, measles, and rubella the rest of their life. They take that just so they can go to school, right? So essentially it's a one and done type scenario. Or is COVID going to be a scenario where you're going to have to get yearly COVID vaccinations? So you have some places where if you work in healthcare, they want you to get the flu vaccine. Some people make it mandatory. Some places make it optional, but they want you to get it. So will it be something that you got to get yearly? So maybe they can have a yearly vaccination where their revenue comes in yearly, and then their job is just to try to get as much of the vaccination market for COVID as possible. Or is it going to be something where it's going to be mandatory, where maybe they'll make you be vaccinated to travel, to where everybody that travels internationally, which is a lot of people, is millions of people all over the world every day travel internationally, you got to get a COVID vaccine, right? So when I worked in healthcare, I worked at a place where you had to get a hepatitis vaccine. It was mandatory. You couldn't work there because I worked around bloodborne pathogens. So I had to get a hepatitis vaccine that had to be mandatory for me to even get a job there. So maybe in a scenario like that, that will allow them to have some type of consistent revenue. But if this COVID-19 vaccine turns into a one and done deal where you get it and you're good, or maybe you get it and you're good for 5 years, I'm not necessarily sure where new revenue is going to come in at. So that's one of the risk, I think, with buying this thing now at this particular price point is, where is the new revenue going to come in? Because they've never, ever created, to me, a successful drug that I know of. So to me, this is one of these companies where COVID kind of made this company relevant and kind of gave them some legs and kind of is driving revenue into their company. So I think this is a good acquisition potential, where maybe a big company like Johnson & Johnson or Merck or somebody comes in and buys this because they want that vaccine, or maybe they license out the vaccine and just pay them a royalty every year for licensing. But maybe they just look to buy the whole thing, because you're talking about a company that's driving good revenue, has a decent amount of money, and they got $7 billion in cash inside the company. And when you buy a company, you get the cash, right? So if we buy this cash for a multiple of revenue, let's say we buy it 10 times revenue, right? We get a lot of that back once we get it, because we get to $7 billion in cash, and we only owe around $300 million in debt. Now, I don't know of any outstanding debt that they may have that's going to hit. That may be like ladder debt from maybe real estate and things of that nature that might be hitting into the future. But currently right now in their books, they got $279 million in debt, which is really, really good. So that's what I would look at, right? If I'm going to trade this, and you look at their options, they have a pretty liquid options market because they have weekly. So you got 14th, 21st, 28th, 4th, 11th, 18th. So what are going to be some of the catalysts that are going to kind of drive the options activity, right? So you do have a decent liquid options market. If I was going to be a buy and hold person, my question is this overpriced based on comparable pharmaceutical companies? Now, you may want to look at pharmaceutical companies that have a market cap that's comparable to them. So if you look at them, their market cap is 65. If you look at Johnson & Johnson, their market cap is 443. Right. But even though Johnson & Johnson has a larger market cap, their price to sales is a lot lower than a company that has a market cap of 65, but their price to sales is 77. So is this particular stock a little bit overvalued? So maybe you want to wait to see if it sells off a little bit more, to where you're not overpaying for this based on the EPS, the earnings per share. You're not overpaying, which is 149 for Johnson & Johnson. It is 566. So to make sure you're kind of not overpaying per share, or do you want to get in now because you believe this could be an acquisition target, and then once we get the news that it's going to be acquired, it's going to just shoot up? But also understand the environment that you're operating in with this COVID thing. Is this going to be a one and done from a vaccine standpoint? Are these vaccines going to be mandatory? Are they going to be something that we got to take yearly? Is it going to be something we got to take every 6 months? Is it going to be something that so much of the world, based on their occupation or maybe the line of business that they're in, that they have to get it on a regular basis, to where it's going to always continue to try to drive in some type of predictable revenue, like a lot of these companies that sell these flu vaccines? Are they going to make it mandatory for children going into school? What is going to be the goal for that? And that's just going to take some research. It's going to take some research. You understand the political environment, you understand the medical environment. But when you're in the pharmaceutical space, it's that type of information that can kind of determine what direction you think these companies are going to go in. So if you got any feedback, you got any comments on this, hit me up in the comments. If you want to learn more about how to take situations like this and use these to drive income into your situation, and understand how you can use the markets as a way to leverage your life to get more time freedom, to eliminate income instability, utilizing the options market and options trading. Got a class called the Highest Paid Part-Time Job of the World Options Training Program. You should reach out to me about it. It's for people that are serious about getting the results from the market. Like, share, subscribe. This is David W. Williams, also known as Diamond Dave, and I'll talk to you later.